Press the bell icon on YouTube and don't miss another update.
So what is the one continuing story for many days that you might be cluttering up your mind? And if you are figuring out what exactly is happening, I will try to simplify it a little bit for you. This is about the so-called fight between the central government and the Reserve Bank of India on the other. Reserve Bank of India and the central bank always have a strained relationship. They are supposed to have, it's healthy, because one is an institution, one is the government, one is the executive. So institutions are supposed to act beyond the pressures of a majority government and decide as per their remit and as per their charter. Often tensions arise between the government and the Reserve Bank of India, usually when the economy is in trouble, because it suits the government to make credit easy, to have more money flow in the markets, to get people easy loans at lower price. It suits the government to have interest rates lower, but there is a contradiction. The governments also want inflation to be lower, because for interest rates to be low, inflation has to be low. For inflation to be low, government has to be disciplined with its spending. Then there is a gap. There is a margin between the price at which the banks borrow from us, which means the interest they pay on our deposits, and the price at which they lend to various lenders. In India, it's usually higher than developed countries, partly because of priority areas lending, which is in small dollops, so cost of lending is high, and partly also because a lot of our corporates traditionally have been very, I would say, criminal in their commitment to repaying their loans. There is a lot of over invoicing, there is gold plating of projects, and we are paying for that right now. So today, all these crises have come and hit India's economy at the same time. The rupee is getting weakened because in the US the Fed is increasing interest rates, so capital is going out. As rupee weakens, foreign capital becomes even more scared because they think that if they brought in money at 60 to a dollar, now it becomes 75 to a dollar, they are losing that much value in terms of how many dollars they can take out now. So in panic, they go out again. Third, India's exports have been struggling now for the past 5 years. In fact, India's balance of trade has been dismal. So in any case, enough dollars are not coming in. Next, because the banks have been hit by bad loans. Now the banks had these bad loans in their books for some time. But what has happened in this case? What's happened is the RBI has cracked the whip. RBI has said you cannot hide these bad loans as family secrets. So RBI has come out with yardsticks, which some people think are too strong. In some ways, even I think they are too strong in terms of when a loan has to be declared a bad loan. It's almost like if you can't pay for one day your installment or the corporate's equivalent of your EMI, this has to be declared a bad loan. So what happens when a loan is declared a bad loan? One, the bank has to take a hit on its balance sheet. It has to not write off that loan, it has to put it aside saying it's a bad loan. It can't take it in its assets. It's always wrong. It's a slur to say that banks write off the loans of corporates, but we'll come to that some other day. But the bank has to set it aside. Second, that borrower then cannot borrow any money from any other bank. And third, which is the most important, if in a limited time that borrower does not start servicing his loan, which means paying back his loan, then he goes into the bankruptcy process. Now, bankruptcy process is something that I call Mr. Modi's crowning achievement, economic achievement in his 4.5 years. He's done a few really funny things like demonetization, for example, paying so much attention to the public sector undertakings and at the same time driving down their value. But the best thing he has done is to drive this bankruptcy process forward for corporates who are unable to pay their loans. Big companies have been sold. As we speak, one of our biggest, SR Steel, is being sold, and in fact, it's owned by very influential people who would have thought that they'll be able to make phone calls or go and smile at the right people and succeed in stopping this sale, but they haven't been able to, even though now they've themselves come up with an offer which is higher than that of ArcelorMittal, which is buying this company. So it's good that the government is standing firm on that. At the same time, the government is not happy that Reserve Bank of India is pushing this process forward. The government's view is the economy is in a fragile state, there is not enough credit, growth is slowing down, investment is not taking place, so release more money in the market. It's like give a stimulus to the market. The RBI's view is it is easy money policies, it's stimulus when you give too much money to corporates too easily, that people over invoiced and people gold plated their projects and they cleaned out that money and you are left with this bad debt problem. So don't repeat the mistakes of the past, don't throw good money behind bad money. There is merit in both. RBI could perhaps be a bit more accommodative, generally, not just now, and governments have to be more tolerant of an autonomous institution. But as these tensions rise, they ebb and they rise, the wrongest possible time for a government to intervene with the autonomy of institution or to come down on it with an iron fist is when there is a crisis in the economy. There is today a crisis in the economy. There is no run on anything, but 70% of India's banking system is owned by the government. A majority of government's banks cannot lend anymore because the RBI has put them under what is called as PCA, which is prompt corrective action, which means their non-performing assets have become so high that those banks are, mark my words, bankrupt for all practical purposes. One of those the government tried to save by getting LIC to buy IDBI Bank. It's like taking a loss-making asset from one pocket and putting it in the other. All the others are going through trouble, mergers are being planned. I think it's a good thing that the RBI is forcing the government to bring about this reform. The pressure from the government and the political side is don't be so tough, let these banks start functioning, let them release some money, money will come back, at least be nice to the small and medium industries. That is the nub of the problem, but look at the crises that are brewing. IL&FS, a big infrastructure corporation, a blue chip. It was rated AAA by one of India's most reputed rating agencies. In a week, it became junk. Now, more than 1 lakh of crores are stuck of various companies in that company. And what does that company do? That company finances. It's a non-banking finance company, and many other non-banking finance companies have given their money to them. You want to know how ridiculous this situation is? That Life Insurance Corporation and State Bank of India, who specialize in measuring risk on companies that they lend to and who understand the markets and companies and corporate governance, they have even invested their employees' pension funds money in IL&FS. Now, you are dealing with that situation that is threatening to take down many other non-banking financial companies and one private bank as well. You see why Reserve Bank of India has been so tough on the CEO, on the promoter CEO of Yes Bank. So it is in this free-for-all that this tension has arisen between the center and the RBI. This is no time for ego. This is no time to settle inter-institutional scores. This is a time when you are going through a crisis. It's like being at war. This, on the economic front, this country is right now besieged. It's at war. Not enough money is coming in, too much money is going out, rupee is weakening, exports are not picking up. Because of our mining collapse, we are importing coal, iron ore, bauxite, all the things that we should be exporting, and we have been exporting traditionally. In that situation, everybody has to work together. We will only hope that the Prime Minister and the Finance Minister, who is now back at work, pay attention to this and don't let this get out of hand. Otherwise, this will have devastating consequences. You know, sometimes you might ask me, how do I hold forth on almost anything? On pollution one day, on the economy and RBI the other, maybe cricket the day after. I'll tell you why. I am not the only one doing it. We have a wonderful team of reporters and editors at ThePrint. all of whom are domain experts in their own specific area. So what do I do? Before I come in to speak with you, I go and catch one of them, depending on what I'm talking about, and pick their brains and come and give it to you all as my wisdom. So keep watching this. Also keep watching all the stuff that my colleagues are putting out on our YouTube channel. So subscribe to it right now.